Hello, everybody. Welcome to the Inner Circle Boardrooms, Business Studies Backstage Pass. If this is your first time here, a very big and warm welcome to you. My name's Kate Chohan. I'm here with my fellow podcaster, Mike Elwood. This is the place you want to be if you're interested in business, finance, and leadership. So pre-COVID, we were chairing and facilitating one of the most successful in-person C-suite business think tanks where we had investors, chairs, and CEOs all participate. Like many, due to the pandemic, we've decided to continue producing educational content. However, we've gone online. What you'll find in these recordings is a lot of discussions with each other, like today, but we'll also be interviewing some of the greatest leaders that we know. So watch out for some of our other videos. So please do subscribe and click the big red bell icon. So let's crack on with today's conversation. So 2020 so far has been an interesting year for many, where businesses have been pivoting and crisis managing. As the lockdown has eased up, we're starting to see a lot of businesses are starting to reopen. There's lots of questions about a potential second wave, and also the feasibility of some of these businesses reopening as well from a financial perspective and consumer behavior. So the question is around impact and implications for businesses. Mike is from a financial services background and is a non-exec on a number of challenger banks, and we'll be discussing the future of challenger banks. We know that Monzo announced some layoffs of about 8% of their total workforce, and then you've got companies like Starling Bank, who raised back in February 60 million, and then they had another cash injection of about 40 million. That was back in May. And also they've moved over to offer BBLS loans. So we've got a lot to cover in this conversation. But Mike, just to start off, for those who don't know, what are BBS loans?
So that's the bounce back loans that the government put out to kind of help the economy through this difficult period. So lots of other banks are doing them, but the fact that Starling were chosen, I think, shows the progress that they've made to become one of the market contenders.
Let's compare, when you think of Monzo versus someone like Santander, what are the challenges and impact for those two different types of businesses?
Yeah, they're directly opposite. So Santander as an organisation, like the other big banks in the UK, have got millions of customers. They've got a big old infrastructure in place. They've got lots of employees, quite a capital intensive model. So they've got a lot of market share, but actually innovation is really difficult. If you look at where the challenges come in, then they have none of the history and shackles of the past. They're able to look at new technology and be agile and sharp at the things that they do, but they lack a customer base. So they've got to get their model to market pretty quickly. The challenges that they face are one, the investment needed to get the platform built, to be able to get customers and to make their company profitable, because without that, they need to continue to go back to their investors to put more cash in without any return. And, investors all need a return at some point in time. So the more cash that builds up over longer means the investors are looking for a return further down the line, and therefore they'll need more for it. In addition, you've got the larger banks not going to just let this happen to them. So they're all investing huge sums in digitalization and improvement in their products and services to meet the changing customer demand. So you've got this whole world of lots and lots of different new players. And what's becoming apparent is more specialization. So if you look at the Monzo model, it is pretty much about a bank account and payments. So they're not trying to do SMEs, they're not trying to do large corporates in the way that an RBS did or a Santander did, but they're saying we want that little piece of the market and we're going to try and do that really, really well. And that's where they're focused, and that's what they're trying to do.
What is your take on the future model? Because we've had conversations around the revenue generation of a business such as Monzo. And effectively, they make their fees on the transactions, if I'm correct.
I think that's right. Yeah, I think so. Yeah.
How sustainable is that? What I mean by that is if we look at the market conditions at the moment, because what my understanding, and correct me if I'm wrong, is Monzo is you put whatever reserves that you have, your savings or whatever it be, your wages, it goes into that account, and it's a bit like, I think of it like a direct debit account. So you use it as making purchases based on the cash that you have available in that reserve at that time. I can imagine when you're making small transactions, I suspect you're not going out there making large transactions. The payment, the consumer making a purchase and that transaction fee, I imagine it's going to be small amount. So you'd have to make a lot of transaction fees to make a substantial amount of revenue generation to cover your overheads of not only investing in the technology, but the people behind that who service those accounts as well. I suppose the head is wondering how, moving forward, how do you continue to innovate and how do you continue to become profitable, particularly when markets are being squeezed at the moment? People have been locked down for a long time, so we're seeing transactions have slowed down as well. So I suspect Monzo, like other banks, they're innovating to, particularly Sterling, they're starting to loan because people aren't making as many transactions. What's your take on that?
So whether they're changing the model, I don't know, but you're certainly right in that. My understanding of who uses Monzo and why is a younger generation who've got used to having their wages paid into one account. They use a digital wallet, I think is what Monzo's known for, and they'd use that for their spending money. So you can imagine that's in bars, restaurants, coffee shops, none of whom are really trading at anything like, they're probably 80% down right now. So the Monzo model, I think, must be under some challenge. Equally, they've just announced, I think, that they made some credit losses over the past year of about 20 million. Their budget was something like 3. It was a long way beyond. Now, just how they've made that level of credit losses, I don't know. But when you talk about the funding rounds they've had, 20 million is a big part of one of their funding rounds. So that model must be under pressure now, I think, in terms of being able to generate the market share that they need, the revenues that they need to give the investors a return. They'll always have the technology that they've created, and I think it's a good technology, but I think it's got quite significant challenges in the immediate future, and just where it heads, I don't know. It will get supported. I think the investors will support it, but it looks a long road for them at the moment.
I suppose what I'm trying to figure out is, how do you innovate that business? What's next? They're obviously successful in some of the market share that they have. They've got competitors out there. There isn't demand for it as well. But I suppose my question is around the transactions that people make are leisure, hospitality. And if these businesses are not getting customers come through, then obviously the likes of Monzo's are not making the revenue either.
And this is the danger. So their strength is about focusing on payments and that kind of that leisure payments part of things. But equally, that becomes your weakness because you're too narrow. So you get a big impact in that area, and then suddenly your model's under quite a challenge. They can go and try and lend money, but as we've just seen, they've lost 20 million quid, and they only lent about 150 million in the last 12 months or so. So it is really difficult for them, I think, to work out where do they go. I suspect what might have to happen is that the pricing will have to go up to give them any kind of return. So whatever they were charging in terms of their payment fees, that's going to have to go up. But if we remember, actually what they were competing with the incumbent banks on was providing transaction services at a much cheaper rate because of their technology. If they then start to move their fees up so they're just like the incumbent banks, what's their differentiation? I think where we're getting to, there's been, over the last number of years, there's been an awful lot of new licenses given out to challenger banks, all based on fintech technology, all great stuff. And we've been investing in that and bringing models to market. What we're now finding is that's only one part of the journey. And how you then get that business into a point of capturing customers, capturing market share, operating profitably is a very different area. It is difficult. Banking isn't easy. Otherwise, lots of people would be trying it. and they're now beginning to face some challenges around how to make their money and how to get a return on investment. Some will be successful, some won't. I think some of the proprietary technology will be snapped up by other people. So, if Monzo's platform's great, but they run out of investors, what's to stop one of the incumbents buying their platform? What's to stop an Amazon or a Google buying their platform? I don't know, but I think it will go through some of those kind of iterations before we settle down on this. They're going to come to a difficult point where they've had lots of money invested in that. They're going to have to make a return, and I don't know where they're going to settle on fees for that. They're just going to have to drive volume, I think, is the only route for it.
We're talking about how they're really only making money from those small transactions. I think if they were able to go into a B2B environment, it might be slightly different. But then they just become another payment solution. So you're competing against of WorldPay, eBay. There's many other out there also. And
there are some. So people have gone into that sort of tide are in that market in terms of being a small business bank account that's largely based on payments and service. They're not dissimilar to a Monzo model. I don't really know how they're performing right now. I use their service, and their service is very, very good. But I don't pay much in the way of fees for it. So again, I don't know how they're getting a return on their amount of money that's been invested in it.
What are you seeing with new licenses, regulation? Do you think it's getting harder to open challenger banks? Or
it's definitely getting harder.
Yeah.
I think if you go back sort of 18 months, was it when Metro had some challenges around their capital position, there was a noticeable tightening up by the regulator around new licenses and passing the threshold for new licenses. But there's still a lot out there. I don't know what it is. I bet there are 30 to 40 new challenger banks out there across retail banking, SME banking. I bet there's that number out there. But it's tough to get investment. It's tough to get through the regulatory regime, and then it's tough to become profitable when you've done that. So this isn't, if you set off with 40, you're not going to, all 40 banks won't be there in 2 or 3 years' time. There will be consolidation amongst themselves, I suspect. And as I say, new entrants might find it a way into the market. But people like Google and Amazon, I think, have looked at the banking space for some time. But the bit they don't like is the regulation. And it's a really tough market for them. So whether they will ever take the plunge into a banking license or not, I don't know. Maybe they don't need to.
Do you think companies like Tesco's, the cooperative, I think they'll exit that market, and these smaller little banks in that field? If we go back in the Great Depression, you saw a whole wave of banks just being closed down, and to what used to exist. Do you think we're going to see that again moving forward?
Well, I mean, so we ended up with a big 4 or big 5, depending on how you look at it, because lots of consolidation happened over the sort of 70s, 80s, 90s to get to where we are today. Now we're creating more competition, and I guess you'll go through the cycle of consolidation again at some point in time. I mean, it's interesting. You mentioned, I think you talked about Tesco and Co-op Bank. Well, Co-op Bank is now actually owned by a bunch of hedge funds, I think, rather than the cooperative movement. I think it had some challenges a couple of years ago, was rescued, and is kind of managing its own way through. Tesco, I think, sold their mortgage book last year, maybe even the year before, but they found it hard to make it profitable out of their mortgage book. So just what's happening within Tesco Bank, I'm not certain. I think people will dip into the market, will find it tough, and will move out again. And it's going to be those people who've got enough volume and market share and are able to command enough in terms of fees and everything else for their services that can make a profit. They're going to get there. But it's a tough place to be. You need regulatory capital, and you need lots of capital to invest in digital services. So it's a hard place to get a decent return. So the consolidation can only really happen, I guess, amongst the challengers. So I don't think the regulator
would, the challengers. Why only under the?
Because I don't think the regulator would allow any one of the big 4 to merge or take over one of the big 4. So I think they would keep them separate.
But what if one of the big 4s were highly debted, like RBS was, and had to be privatized, went from privatized to nationalized? Moving forward, you believe that even if you're a big four and you're highly debted, do you think the only option would be the government would approve would be to go to nationalise the bank?
Well, if that happened, it means all of the efforts of the ring fencing of the banks, which were put in place over the last couple of years, has failed. So, that's kind of in place to stop an RBS happening again, where corporate loans brought down the retail bank. So, in theory, what would happen now is that the ring-fenced retail bank would be protected, and actually the non-ring-fenced bank, which would have most of that bad debt within it, would be allowed to fail. So it wouldn't be great for the shareholders of the bank, but the retail operation would be saved.
Mike, for those who don't know too much about what ring fencing means, can you give an explanation on that?
It's very simply where the government have said that you can't do risky activity inside of a ring fenced bank. So you can only take retail deposits, make retail loans and small business deposits and loans inside a ring fenced bank, and effectively that will be protected. Everything outside of that is non-ring fenced activity, and it's where, if you go back to where RBS was, then all of those bad corporate loans that was on the RBS balance sheet would sit in a non-ring fenced bank. And what that means is that in the event of difficulty, you can just let that go and the shareholders lose their money, but the systems that you need to keep the economy going in the retail bank are protected. So the government, it's easier to make a decision for the government. So if their loans cause the bank to be unsustainable, because a non-ring fence bank is no longer running the infrastructure for payments and services as it was at the last financial crisis, you can let it go. You can let it fail, because it's not going to close the ATMs and not going to close the branches. So it allows the economy to continue to move, but the shareholders of that non-ring fence bank have lost all their money. So I think there will be consolidation amongst the challengers, because I don't think they can all survive. So that's, I'm talking over 5 years now rather than next 12 months. I think some of the incumbents will really get their transformation together, and they'll invest a lot of money and will really get their transformation together in terms of products, services, efficiency. So they will become really dominant players. And then, despite what I said about Google and Amazon and not liking the regulatory regime, I wouldn't be surprised to find one of the tech companies really taking an aim at the market and doing something within the market.
If you had to look at a challenger bank and say, oh, that one's interesting, Starling at the moment, they're doing some really interesting stuff. I think they've positioned themselves in a really good way. My only concern about the BBLS loan that would be paid back at the end of it. So how much risk are you taking, and how are you protecting yourself as a bank from that risk as well?
Yeah, I mean, they should be protected because they come with a 100% guarantee from the government. But of course, if the government's having to pay that out, then that affects us all anyway. But for starters, they ought to be protected. But they're still in the Monzo phase for me. I still don't know how they make their money. They're gonna lend into the SME sector. If you get it right, lending into the SME sector, that's great. If you get it wrong, you can lose a lot of money. And some of these rounds of funding that we talked about, 30, 40 million, as we saw, Monzo lost 20 million in credit write-offs in this last year. So you can spend or lose almost one funding round.
Is £20 million in credit write-offs when people are using their own money?
Well, I suspect, I don't know. Okay, I don't know. I'd need to have a look at that. I don't know whether they do credit cards, whether it's on that or not. Don't know. They went into America. Whether they got something different in America, I don't know. But it's a challenge. That level of losses is a big challenge, and no one's immune from that. And particularly if you've got a book exposed to SMEs right now, it's going to be a really tough time over the next 2 years for SMEs post-COVID and battling through whatever the new world looks like. That credit is going to be a difficult area for everyone.
And I just want to deep dive this a little bit.
Who's investing in them? Yeah, I mean, they pitch a model and an idea, and they kind of say, this is where we're going to get to. A lot of them talk about using data and using data better and selling data to other people. So the market in kind of collecting data and statistics and selling to others must be enormous now, because every business says we don't really do that, we collect data. Well, you can't keep selling the same data to the same people. So some people will do really well out of that, but it can't be used as an excuse for a poor business model.
Worldpay's done something similar. Why people spend money, when they're spending, what time of the day, how they're making those transactions, what time. So then they sell that back to the retailers, so the retailers know how their consumers are acting and how they're spending. Selling data, that makes sense. What we're trying to say is they're now a financial data company
and that's fine.
Make transactions.
But if that's what Monzo were doing, actually they're not all going to succeed. They can't all. I've only got one set of data. I've only got one set of spending habits. So WorldPay might sell it, but Monzo can't sell the same stuff, or others can't sell the same stuff. So, not everyone is going to succeed at this idea of capturing data and selling it to other people. There will be winners and losers, like there is in every sector.
Where do you see opportunities? I know you spoke about consolidation. Anything else about the value of data, which is visible?
Yeah, the SME space is an interesting one, because as the incumbents are really wrestling with the amount they have to spend on digitalising their retail banking franchise, how much they've got to spend on regulation, SMEs have been left behind. It's a segment that they're not looking after as well as they used to. The operational risk is quite high. So actually, there's room for a number of challenger banks to take on that SME lending space and SME services space. But there are lots of people doing it now. There are licenses in for, I don't know what it might be, 10, 12 new SME lending banks. So either it's going to be a really fragmented market, or some of those aren't going to get to the critical mass that they need to. They'll all build platforms, but as I've said before, it's only when they've got critical mass to generate revenues that they're really going to develop a profitable model. And I can't see that they're all going to do that.
Has your view changed in any way since then?
No, my frustration, was trying to get the traction inside the large banks to move quickly, to look at the threat of disruption, look at the threat of new entrants to the market, whatever they were. They don't have to be banks, but just anything payment-wise, and just move quickly to it, because they still have the massive advantage of holding, I don't know what it would be, 95% of the customers inside a small number of banks. They still have them. So if they can develop the product that allows you to make your payments easily and a service that makes your life comfortable and easy, why would you go to a challenger or a fintech? So I still think they start in a great place of having lots of market share and reserves to spend on it, but they have to change the mindset and become a lot more agile. They need to be less arrogant about their market share and a bit more humility about their market share, and say it's ours to hang on to. The question, every business should pose itself a question every day, every week, about what is my right to exist. And I think that's where the banks allowed some of this fintech revolution to happen, because they didn't take charge of that.
What advice can you give to anyone who might be watching this that's trying to disrupt marketplace around payments or banking? And obviously you've been through the whole regulation piece as well, so you understand it.
I think it's understanding what the demand is for the product or service that you've got. What problem are you trying to solve, and why is that a problem? And is that a service and product problem? Is it a price problem? But try and work out where your market will be for it, and then understand the milestones it's going to take to get to a return on capital, and how and what steps you're going to go through to get there. Because I think without that, as we've just seen, the disruption that comes along can really hit your development plans and makes you vulnerable. I don't know what will happen to Monzo, but if they continue at that rate, then they'll either go out of business or someone will take them over.
Yeah, I'd be interested to know if any of them are looking to sell. Anything else that you would mention on the topic of challenger banks or banking in general?
When you talk about the challenger banks, they're all relatively simple. I guess the thing, this is a topic for another day, and I'm probably not the right one for it. But we've talked in the past about cryptocurrency.
Yeah.
And actually the real disruptor to the market is cryptocurrency and what that might do.
When you say crypto, are you thinking Bitcoin or would you say crypto?
So this is the problem with this, is that I think cryptocurrency around a payment solution and a currency solution, not an investment. And the trouble with Bitcoin is it's nearly always reported as an investment, not the underlying currency or payment mechanism that it ought to be. The whole purpose of a cryptocurrency is as a currency and a payment mechanism.
I'm with you, what you're saying. Do we think the future is going to be in Bitcoin on terms of how you transact and buy and purchase things? Or do you see it as a investment vehicle, which you're just going to leverage on because people are buying some Bitcoins? Is that?
Yeah, that's it. And whether it's Bitcoin or a different cryptocurrency, I don't know. But I do. That's where I think some of the changes will come, because that technology will really allow you to reduce the transaction charges to next to nothing, which will make a massive disruption to the market, which will really undermine the incumbents in the banking markets around the world, not just the UK. I mean, that's going to be around the world. So that's a fascinating development, which it's taken me some time to fully understand it.
Yeah, I'm the same as you. I have to try and get my head around it.
But I realise part of the confusion is because people talk to you about Bitcoin as an investment, and I haven't got any data to other than its share price to tell me how it's doing as an investment. And I've never understood how you can take away a currency from it being linked to a government or an economy or something.
I'm totally with you on that, 100%. Actually, I think you've just put it nicely, which is the truth, which is one is a vehicle, which is an investment. One is where you transact with it. That's nicely put, actually, because I think my challenge with it is I see it as an investment vehicle, but I don't have sound evidence to validate that it's being used as a currency to buy and sell goods. I'm just seeing it as like a pension fund, where people put it in there thinking that in 20 years time people are going to be trading in Bitcoins.
Who knows?
That's been thought-provoking conversation, hopefully for you guys as well who are watching. If you do have any questions, anything around Challenger Banks, banks in general, tell us what you're seeing as well, because it's always good to learn from other people as well. If you want to ask any questions, just pop a question below and either myself or Mike will get back to you with a response. And we'll be producing these content and these videos every week, but we'll be back next week having another conversation, talking about the markets, what's going on. So till then, we'll see you then.